Hello people, you're welcome today again to our YouTube channel. I am very excited. I am so happy because when I receive positive feedback from you guys, how you are benefiting, how you are learning from the contents I'm making. I'm so happy about that. Even when you drop me a comment on my YouTube channel, I am so happy that you are learning from what I'm doing, and I'm encouraged to do more. And several of you have joined our free Telegram channel. You have been benefiting from the free trades signals we give in our free Telegram channel. If you're yet to join our free Telegram channel, please do not hesitate to do that. All right, the link to that Telegram channel is in the description box of this video. So today I want to do a special video onto you. This is a question. There's a question that every forex trader is trying to unravel. Okay, directly or indirectly, we are all looking for the Holy Grail. All right, every forex trader is looking for the Holy Grail. What's the Holy Grail? The Holy Grail means a strategy that can help you to make profits all the time. 100% win rate strategy. Is there anything like the 100% win rate for a strategy? We have seen a lot of videos on no loss strategy, no loss or zero loss strategy. So is there any such thing as a zero loss or no loss strategy? Okay, because there is actually no strategy that works 100% of the time. Mind you, no strategy works 100% of the time if there's a condition for that. If you are using risk to reward ratio. All right, so if you are looking at risking one to make 2, or risking 1 to make 3. All right, if you are risking 1 to make maybe 4, and etc. Okay, once you have a risk to reward ratio, your win rate becomes subjective. All right, so there is this risk to reward ratio can impose on you a limitation to maximizing your win rate. All right, so once you have risk to reward ratio, your win rate becomes dependent on a lot of factors. It actually drops. So I want to show you how you can have a 100% win rate in your trade, and not just using any strategy or indicator strategy, but using your smart money concept SMC, or which is or demand and supply strategy. Okay, how you can get 100% win rate if you use demand and supply or SMC strategy, which is the smart money concept strategy. So in this strategy that I'll be sharing with you today, we don't actually care about win rate. We are not looking at the win rate here. What we are looking at is, we are not looking at risk to reward ratio, which is your RR. We are not looking at risk to reward. What we are looking at is your win rate. Okay, win rate, and we are looking at getting 100% win rate. 100% win rate. So in this trade, and another feature of this strategy I'll be showing you. Another feature. Let's list the features of this strategy. Let's just itemize the features of the 100% win rate strategy. Okay, number 1, we are not looking at risk to reward ratio. Number 2, instead we are looking at your win rate. Our focus is on the win rate. All right, number 2 is going to be a scalping. It's going to be a scalping strategy. Okay, it's going to be a scalping strategy whereby you get in and you get out. You get in and out so fast. All right, you get in and out because once you waste time, something can happen. Something can happen along the way. So that is the strategy I'm going to be sharing with you. So, but before you understand this strategy, I want to assume that you are my mentee. I want to assume that you have been viewing my forex trading videos, you have been viewing, you have been following me for some time now, you know how I trade. Maybe you are in my Forex Telegram channel. All right. So, but if you are fresh to this channel, this YouTube channel, or you have not taken time to view my previous videos, or you are new to demand and supply, you are new to smart money concept strategy, I want to show you that, I want to tell you that this strategy I'll be sharing with you is it actually works on some principles. The strategy works on, you need to learn these principles. There are some things you need to know, some principles or knowledge, or pre-knowledge. Let's call it pre-knowledge. Okay, some pre-knowledge you need to know. Number one, you need to understand, you need to know demand and supply. You need to know about demand and supply, how to trade demand and supply strategy, how to identify demand and supply zones. You need to know how to identify your demand and supply zones. Number two, you need to understand the concept. You need to understand the concept of entry. You need to understand the concept of SMC, which is smart money concept entry confirmation. Okay, so you need to understand this concept of smart money concept entry confirmations. So these two things, if you don't know it, I will be linking some videos I've made previously on these two aspects that will help you to be up to speed to what I'll be, to the level I want to share with you, to the level of the strategy I want to share with you. So you need to understand demand and supply, how to identify demand and supply zones, how to trade demand and supply zones. You need to also understand how to get smart money concept entry confirmations to trade. Okay, you need to understand how to get smart money concept entry confirmations to trade. So these two things, these two concepts you must understand, and I will be sharing the link to the description in the description box of this video on how you can actually that will help you to brush you up until to the level I want to show you right now. So I want to assume that you have gone to view those videos. I'll be linking in the description box of this video right now. So once you have done that, now you can now come back to this strategy. So this strategy, I want to list the steps you need to take to trading the no loss or the 100% win rate strategy. All right, steps. Okay, let's have another view. Okay, let's have another view here. So the steps. I want to show you the steps to trading the steps to the 100% win rate strategy. Okay, steps to the 100% win rate. Number one, before you take this trade, do not take this trade in ensure that there's no high impact news release. Okay, you need to ensure that there are no upcoming. You need to ensure that there are no upcoming high impact news release like FOMC, like NFP. Okay, NFP. Okay, or the CPI, and several of other high impact news. You need to ensure this strategy does not go with high impact news. So before you take this strategy or this strategy, you need to go to your forex factory. You know, if you want to know how to trade high impact news release, I've actually made videos on that. So you can actually check the video section of this YouTube channel. You see, I've made a video on how to trade high impact news release, high fundamental news, impact fundamental news release. So, but this strategy is not for high impact news release. All right. So this is what you need to know. So ensure that from your calendar, from the high impact news calendar, no one is coming up. All right. So number two, this second step is very important for all trades. Any trade, you are taking in the forex market, you need to understand, you need to identify market structure. Okay, if you don't know about market structure, I've made a video on market structure. Check this YouTube channel. I've made a video on market structure. All right, market structure, or which is also called the order flow, or in a layman's language or beginner traders language, you can also call it a trend. The trend. All right, the trend. Look for the trend. Whether you are on a bullish trend or in a on a bearish trend. All right, whether you are in a bullish market structure or in a bearish market structure. All right, I made videos on market structure. So if you want to understand market, if you want to be successful in forex trading, you are supposed to know what is called market structure. Okay, market structure, very important. So I've made videos on market structure. You can go to the video history section of this YouTube channel. You're going to see a video on market structure. So also, when you have identified your market structure, you should identify demand or supply zone. Okay, you identify a demand or supply zone that is in agreement with the market structure. All right, so if it is a bullish market structure, you should know that you are looking for a demand zone to trade from. If it's in a bearish market structure, you are looking for a supply zone you're trading from, because in a bullish market structure you are looking to take buy trades, and in a bearish market structure you are looking to take sell trades. So that is number 3. Number 4 is you need to wait for price to come to the zone. Wait for price to come to the either your demand or supply zone. Okay, once you wait for price to come to your demand or supply zone, and once price have come to your demand and supply zone, which is number 5, when price comes to your demand or supply zone, you need to wait for what is called look for a change of character, which we refer to as CHOCH, which is called a change of character. I've made videos on what is called change of character. I've made videos on that, and I'll try to link this concept in the description box of the video. So this 100% win rate strategy, as you can see so far, is for those who are experienced already. Or if you're a newbie, you don't do this. Okay, you need to understand these preconcepts I've already shared with you. You need to understand market structure. You need to understand what the demand and supply zone are, what they are. You need to understand break of structure. You need to understand change of character. So right now we're talking about change of character. You need to identify what is called change of character. You need to wait for a change of character to happen. Number 6, all these information are in this YouTube channel. Please refer to my videos. If you are yet to view these videos that I've mentioned on these concepts, go to the history section of this YouTube channel. You're going to see I've made videos on virtually all these things I'm talking about. But I'm trying to synergize them together and give you a strategy that can give you a 100% win rate. All right. So number 6 now, you wait for your RTO. What is RTO? RTO is your return to order block. Oh yeah, your return to I'm gonna explain using a chart right now when I'm done with itemizing the steps. Return to order block. Okay, return to order block. You're gonna wait for your RTO, return to order block. If you don't know what RTO is, I'm gonna depict it in the chart right now. All these concepts, I'm gonna show you how it works on the chart. All right, I'm gonna show you. So once you wait for your return to order block, you get into the trade. This is number 7. You get into the trade. Get into the trade. You enter the trade. All right, and you target 5 pips. All right, 5 pips profit. All right. Once you have seen your return to order block, get into the trade. If you're in a supply zone, get into the sell trade. If you're in a demand zone, get into the buy trade. And target. It's important that you target. This is very, very important. Target 5 pips profit. No more than 5 pips profit. 5 to 10 pips, okay. But most importantly, if you want this to work 100% for you, 5 pips profit, and get out of the market. Once you have seen a return to order block after a change of character, get into the trade. 5 pips profit, get out of the trade. All right, so you're going to see that there is no stop loss. No stop loss. The reason why there is no stop loss to this trade is because this strategy should work 100% win rate strategy. The problem, this will not work 100% win rate for you if you violate any of these steps. If you violate any of these steps, then you might be at risk. But once you follow all these steps I've itemized from 1 to 7, then you target 5 pips profits. That trade is going to work. I can tell you, I've been back testing this for several months, even years right now, and it works. Okay, so you know stop loss. But now, how much should you risk on this trade? Let's say your account, you have $100. How much should you risk? I recommend that you have an imaginary. You can have an imaginary stop loss of 20 pips. But this is not going to be hit. It's just for having sake. Have an imaginary stop loss of 20 pips so that you can risk. You're going to be risking. I recommend that you risk 10%, 10 to 20% of your account. Okay, risk 10 to 20% of your account on an imaginary stop loss of 20 pips from entry. But this stop loss is not going to be hit because you are targeting 5 pips profit. All right, I don't know if this is clear. So, but you're going to, in order for you to calculate how much you're going to put into that trade, I recommend 10 to 20% of your account. You know why I'm saying in a normal trading, in normal trade on a normal day, you are risking like 1% of your account, 0.5 to 1% of your account, because you're looking at risk to reward ratio and all that, and your win rate is low, may not be high. Okay, let me not say it's low, it might not be as high, but in this case, you are stepping up your risk to 10% or 20%, and why you are stepping up your risk so that you can have a substantial amount of profit once you leave the trade at 5 pips profit. All right, so you just assume an imaginary 20 pips profit, 20 pips stop loss, imaginary, but it's not going to be hit, so that you can calculate how much you are risking on that account. All right, so 10 to 20 pips of your 10 to 20% of your account, so risk it on that trade and leave that trade in profit after 5 pips. All right, leave that trade in profit after 5 pips. So in summary, I'm going to show you, I'm going to go into the charts to show you how it works. I'm going to show you how it works on this chart right now. But in a summary, in conclusion of this strategy works on the principle that this strategy is my strategy. All right, this is my strategy which I developed. All right, this is my strategy that I developed, and this strategy works on the principle that price will always move at least 5 pips in the intended trade direction after break of structure, change of character, return to order block on a demand or supply zone. So this is the premise of this strategy. That is to say, price will always, or the market will always move at least 5 pips in your intended trade direction after you have what is called confirmation entry. I can say this after all of these. I can for those of you that are familiar with this, you can say after confirmation entry. After confirmation entry, price will always move at least 5 pips. If it wants to reverse, if the stop loss will be hit, it must not hit after 5 pips. It must not hit after 5 pips. I'm telling you this because I've done a lot of back tests for It was a couple of months and years, and this works. All right, this works. So let me depict it for you in a chart. Okay, let's say now that we have a bullish market structure, like this, and you can see at this place we want to take a bearish, want to trade this mitigation of this, want to trade this mitigation. All right, you want to trade this mitigation, and what is going to happen? We are looking to take a buy trade from here. We will wait for price to come down, and once price makes an incident, this is called the POI. POI means point of interest. Okay, for some of you that are new into this into the forex trading. So once price comes here, this could be your H1 time frame. Let's assume it's your H1 or 30 minutes. H1 or 30 minutes time frame. Now here, this is where my focus is. So you step down to, this is H1 or 30 minutes time frame. Now you step down to possibly 15 minutes or 5 minutes time frame. Okay, this is the zone. Let's assume this is the zone. What you are expecting to do, we want price to come to this zone, and you look for what is called your break of market structure, or rather your change of character, and you get into the trade here. So let's say that the market incident here, this, we are trying to explode this. Market came down here, break structure to the upside, which is called the return to order block. We are getting into this trade here, and we are targeting 5 pips. So if you target more than 5 pips, it might work, it might not work. But I'm telling you that when you target 5 pips, this is your change of character. If you target 5 pips, you are sure. You are sure. I will tell you are sure, because I've done this. It has not failed me. Okay, but if it fails, it means you did not. Perhaps you traded against the zone. All right, you traded against the market structure, or maybe you traded during high impact market news release. All right, or you left the trade. You did not enter. You did not see a valid change of character. All right, possible reasons. Let's just itemize it. Reasons that can cause failure. The reasons that can cause failure of this trade: number one, high impact news release. When you trade on high impact news release. Another thing, you did not look for. You are trading against market structure. Okay, you trade against market structure. Another thing that can cause this strategy to fail, if again you did not get the value, you refuse to take profits at 5 pips. Okay, due to greed. As a result of greed, the one that should come, number 4, should actually come before number 3, but let me just state it here. No valid change of character and return to order block. Very key. You are deficient in identifying valid change of character and return to order block. These 4 possible reasons can result to failure of this strategy. So it is not my fault. It's not the strategy that is at fault, but you did not follow the steps. All right. So once you follow the steps, you are guaranteed that this strategy should give you 100% win rate, 100% win rate, 100% win rate strategy. Okay, now let's see some occurrences of this strategy. Let me just depict it again. Let me depict it. Like in this case, right here, we are on a H4 time frame. You can see this zone. This is a demand zone. Let us go down to say 15 or 5 minutes time frame and see this zone. Let us see this zone. There are about 2 zones that picked this city zone. Let's see another zone. This is demand zone. This is another demand zone. Okay, let's step down. This is 1 hour. Let's step down to let's say 15 minutes time frame. Okay, let's go to 5 minutes time frame to see it clearly. Okay, now you can see that zone. You can see that zone. You see the zone. We just expand. We just went down to lower time frame. So we moved from H4 to M5. For this is entry. This is setup time frame, and this is entry time frame. It could be M5 or M1 or M15, as the case might be. All right. So now, you can see what happened right here. This is our focus. This is our focus right here. So here we have the market. We had the market do what is called the change of character. If you don't know what is change of character, go to my video. I've done videos on that. All right. So this is your return. This is your return to order block. Return to order block. So this is 5 pips. About 5 pips profit. All right. If this trade is going to fail, if this trade is going to fail, it should move at least 5 pips profit before it fails. But the greed here is some people would want to keep on holding. If you want to take this strategy, you don't at 5 pips, please take your profit and run away. Go and shield with your profit. All right. So, but if you want to go further, then you need to at least take out some of your profits, because here our advice that you risk like 10 to 20% of your account. So, but if you want to do risk to reward, if you want to do 1:3 or 1:2 or the rest of that, all those all those risk to reward ratio kind of trading, then you should reduce your risk to 0.5 to at maximum 1% risk. Okay, while I said 10 to 20% risk on an imaginary 20 pips stop loss, imaginary 20 pips. Okay, imaginary 20 pips stop loss. This is just imaginary. So you are using 10 to 20% of your account, but you are risking high because this strategy is a short banker. And if at all, that is if you follow the steps I've listed out for you. Okay, so that is it. So let us see another one. Let's go up. I think, okay, this is what I just showed you right now. This one. Okay, I think let us see. Oh, could it be this or this one? Okay, now let us see this. Let's see that. The lower time frame, we're going to step down to 5 minutes. This is the one we just looked at right now. So let us go further to see another setup. Okay, look at it now. Okay, so look at it now. Here we are always interested in the return. We are interested in the return. This is the demand zone. So here you can see there was a change of character. There was a change of character right here. There was a change of character, and you can see there was a return to order block. There was a return to order block, and if you see, this is our take profit of about 5 pips. Our imaginary 20 pips stop loss bet, it is not going to be hit. So if you get out from here, so are you seeing this is clear? Are you seeing this? So it's not going to be hit. All right, it's not going to be hit if you followed all the principles, you followed all the steps that I've itemized for you in this strategy. So that is the strategy actually. So I would want you to go and backtest this. I want you to go and backtest this on your chart. And once you learn a new strategy, you just don't go and trade it on a live account. What is right for you to do is to go and backtest the strategy on your chart, and you get data. After backtesting on your chart, you can try it on a demo account and see how it works. And if you feel you are confident, you've understood the ropes, you've known the in and out of the strategy, then you can now choose to trade the strategy on your live account. All right, so I'll be coming with you many more. I have many more concepts I'm going to share with you, a lot, but I don't have time. So that's why I do one video per week. I don't have time. I'm very busy. So, but I have so many concepts, so many strategies that you can use to plug money from the forex market. You're going to plug in money from the forex market if you take your time to study these concepts and learn it very well and understand how they work and know what is called risk to, you know the ropes and the behind, you get good knowledge on these concepts, and I believe that you're going to be profitable in the forex market. Now, if you want me to mentor you personally, currently I have some mentees, people are mentoring, and I don't do collective mentorship. You are aware I do one-on-one mentorship. The reason why I do my one-on-one mentorship is because I believe that each individual has their own learning curve. So I stoop down to your level, take you by the hand until you become a profitable forex trader. Okay, if you want me to mentor you, my contact is in the Telegram channel. All right, and my Telegram channel is, the link to my Telegram channel is in the description box of this video. Well, when you come to my Telegram channel, DM me and I'm going to reply. We're going to start up a one-on-one forex mentorship course, and you're going to learn a lot and become good in trading after the course. All right. So also in the forex Telegram channel, I do send free chart analysis, free chart signals. But if you want to know how to send those signals, all right, if you want to learn how to trade on your own without even depending on signals, join my forex mentorship course. I'm going to show you there are some things you cannot find on YouTube video. There are some things you may not see, I may not share on YouTube video. But when you come to the forex Telegram channel, sorry, to my private mentorship, I will expose more things to you as a mentee. So till I come your way next time, do have a wonderful day ahead. Bye.